I believe, and I did a couple of videos about this, that gold and silver are on sale right now. We should embrace this. Every single time we get a drop here, we should be scooping up as much as we can, especially silver. You know, it's my favorite asset.
Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with your SD Weekly Metals and Markets Wrap. And with us today is Greg Mannarino from traderschoice.net. Greg, thank you so much for joining us today.
Thanks for having me, Elijah. I appreciate your show. I appreciate you.
All right. Well, we really appreciate having you on today. Now, the first topic I'd like to discuss is the stock market because it just keeps going higher and higher. Again, today on Thursday, it hit another record high. What do you make of what's happening?
Well, it's quite an amazing thing just to watch, honestly. But it's no surprise to me at all. I've been telling everyone who follows my work over the past, I don't even know, a couple of months now, that we could expect the market to do what it's doing. And specifically, I would have to say about 2 weeks ago, when we saw cash leaving the bond market, I was telling everyone, get ready. It's going to look for some place to go. And in this environment, the only place it's going to go is into the stock market. So that's what we're seeing here. And it does not look like it's going to let up anytime soon. Just for example, the U.S. 10-year yield today hit 2.345. And what does that tell me? That tells me cash continues to leave the bond market. It's going to look for a place to go. It doesn't go to money heaven. It's not going to go, unfortunately, into precious metals at this time. However you want to look at it, you can say, hey, this is a great buying opportunity. I think it is moving forward. But for now, the environment is risk on. Cash is coming out of the bond market, making its way into the stock market. I have almost no doubt that barring some type of almost supernatural event, the market is going to continue higher here. It's the environment that's being created by the Fed at this point. Everyone's getting in on the bandwagon here, and it's gonna keep doing this until something acts against it. And I don't know what that might be. I don't care what it is. I just want to ride the wave right now, and I want everyone else who follows my work to do the same thing.
Now, what about the dollar? You've recently talked about how you think the dollar is at a short-term top. For it seems like since the beginning of the year, the dollar has been on a general downtrend, but it's been rising just slightly recently, and you're thinking it's at a short-term top.
Yeah, I was looking at the charts yesterday specifically, and you're right. Last December, the dollar kind of peaked. It's been going downward since that time, losing value since that time, and we did see about a month ago a reversal where the dollar started to gain some strength. I'll tell you, yesterday it appeared that the dollar, or looking at the technicals, wanted to give some back here, but the dollar did gain again today. We may be looking at a short-term top here. I would not be long the dollar. Especially in this environment or right now. I would look for other places to put your cash. But we'll see how that plays out as well. The markets are reacting in a very, very interesting way. Again, we got this dollar strength here on speculation about what the Fed is going to do. But the market isn't believing the Fed with regard to any meaningful way raising interest rates. And that's why we're seeing the market as well do what it's doing. The Fed is running the show. The Fed does not like this strong dollar. We know that to be a fact. This is not speculation. The Fed wants to weaken the dollar. I believe them. They're going to do whatever they can to create inflation. I believe it was William Dudley who came out and said that several months ago. So we can expect them to act against the dollar. But in this environment here, I can't imagine why the stock market won't continue to move higher. Again, our our economy is going nowhere, but that does not mean that the market isn't going to go higher, because there's nowhere else for investors to put their cash right now. That's why we're seeing the market melt up like this. It's also on hopes that we'll get some kind of meaningful tax relief. But the fact of the matter is, nothing is real. We are existing in an environment of extremes. And we just need to ride the wave and look for opportunities wherever they may be. And I think that's just so important.
Now, mentioning the Fed and how they want to weaken the dollar, what do you make of their plan to normalize the balance sheet? And you've also talked about how you think the Fed is going to raise interest rates in December. Now, these two actions don't seem to be inflationary. So what do you think is going on here?
Exactly. I've been pondering what the Fed is going to do for a long time. My calls on the Fed have been incredibly accurate, as you know. I have been wrong once, ever since the Fed started talking about raising rates and what they were going to do. So I think my record stands second to none. So I've been thinking about what the Fed is going to do moving forward here. And I did talk about today, as a matter of fact, that I believe the Fed is going to raise the federal funds rate in December. It'll be a meaningless move, in my opinion, but I think they have no choice. They're going to do whatever they need to do to try to remain credible, to make it look like they have control over what's going on. And I don't believe that's the case anymore. The market is dictating to the Fed what's going to happen, and it's not the other way around. So with regard to the Fed's balance sheet, the day they announced that they were going to start unwinding it, I actually cracked up and laughed so hard I think I might have fallen on the floor. The Fed is not going to do anything meaningful with their balance sheet moving forward. They can't do it. If the Fed were to actually normalize their balance sheet, that would mean they're allowing the market to dictate value, fair value, especially for debt. They're not going to allow that to happen. No person on this earth right now is smart enough to know what the actual yields would be on bonds at this point, with the Fed now suppressing rates for the better part of a decade. So we can expect more of the same. And what that means is more easy monetary policy. That's why the market's doing what it's doing. The market does not believe the Fed is going to do anything meaningful at all with regard to their balance sheet. And they're going to continue to move goalposts here, Elijah. There's no doubt about it. They're going to do whatever they have to do to keep the market doing what it's doing, because it's a distraction. It makes people say, okay, look at the market. The market's at record high. So our economy must be doing really well. Meanwhile, if our economy was doing so well, why didn't the Fed do anything at the last FOMC meeting? They couldn't even raise the federal funds rate 1/4%. Or 1/8 or whatever at the last meeting. And this is what they're going to do moving forward. They're going to sit there. They're going to send out Fed presidents who are going to sound like, oh, well, we're going to do this next year. We're going to get 3 rate hikes and 4, and we're lucky if we even get 1. This is a repeating story. So this is how it's going to play out moving forward. No doubt about it. Easy money is the name of the game. The Fed is running the show. Although they're answering to the Fed is bowing to the markets here. The market will have a absolute fit if the Fed were to do anything with regard to their balance sheet, or meaningful with their balance sheet, or raising rates in any meaningful way. And the Fed does not want to get in front of that, because they have no idea of what can possibly happen. And I can tell you something else. The Trump administration does not want this easy money to stop. President Trump, that's all he talks about is the stock market. Look what the stock market's doing. He really doesn't want you to look at the economy, because he knows very well that our economy is going nowhere. All he has to do is look at the money velocity. He won't talk about that. President Trump wants to keep the stock market where it is, use it as a distraction. So the misinformed will be looking over there and not concentrating on what's actually going on.
I'd like to move our focus now to the precious metal markets. What do you make of the recent price action, and where do you see gold and silver heading soon?
Sure. Well, the price action of precious metals, first of all, it's not real. And you know that. There's no price discovery mechanism here. But with the dollar getting stronger here, it's putting pressure on metals. These are priced in dollars, okay? The weaker dollar is also stock market positive, although we have seen this bump over the past month or so. But, everyone's going to disregard what the dollar has been doing for the prior 8 or 9 months. It's insane. But I believe, and I did a couple of videos about this, that gold and silver are on sale right now. We should embrace this. Every single time we get a drop here, we should be scooping up as much as we can, especially silver. It's my favorite asset. Why are we doing this? We understand where we are. We're sitting here right today underneath the largest bubble in the world has ever seen. And it's going to get much, much worse. And that is this bubble in debt. World central banks are buying everything. They have to continue to do this. It can't stop. We have natural disasters. We have Puerto Rico out of money, other countries out of money. They're going to have no choice but to continue to inflate until the moment of maximum saturation. I've been using this term for a while now. We are going to hit it. I don't know when that is, but when we do, that's it. It's over. The debt-based model can no longer function, and we need to look at metals here as long-term investments. Like I've been telling everyone for years, we're not trading these things. We're betting against the debt. We're becoming our own central bank. And we're going to hold these things because we understand that there is no alternative to inflating the debt larger than it is. You're taking the opposite side of that trade. And if you're smart enough, you will sit there and continue to do this until this whole thing normalizes. It will normalize. All of these markets at one point are going to correct to fair value. We've had a Fed now for nearly a decade who has been artificially suppressing interest rates. This has caused cash to move into places where it shouldn't be going and coming out of places where it should be going into, creating a void in the middle. That void is going to be filled. And I tell everyone, do what I do. Watch the bond market. For example, this run-up that we've had in the stock market, I told everyone it was going to happen. I told everyone to watch where the cash was more than likely going to be going. When we saw the bond market sell off, nothing happened to the stock market. But I sat there, I was patient, and I watched. And I said, okay, where's the cash going to go? I know it's not going to money heaven. So look, bam, did exactly what I said it would do. Going into the stock market, it's going to continue doing that. At least for now. But we are going to reach a point here when the debt market starts to sell off rapidly. And don't listen to Greg Mannarino anymore. Start listening to guys like Alan Greenspan, who's sounding exactly like Greg Mannarino with regarding to the debt market and the debt bubble. It's unbelievable. I think he must watch my work, Elijah, and your work too, because he sounds like a lot of us out here on the alternative media lately. But that's the issue here. So until that moment, we just got to ride these waves. Just look for where opportunity is. There is opportunity everywhere you want to look. I'm just urging people to not sit there like a deer in the headlights and do nothing. Do something. Protect yourself. Capitalize on what's happening around you right now. Seek dollar alternatives. I don't care what the dollar is doing in the short run. The longer term, the dollars get nowhere to go but lower. It's just so simple when you can put a couple of factors together like we've been talking about to understand what you need to do and what you should be doing moving forward to protect and grow your wealth.
All right. Well, Greg Mannarino, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online if they're interested in learning more?
Sure. Go to my website, traderschoice.net. There's everything you want to know over there. I post my own videos there, articles I write. Everything is right there. There's also a free ebook, which I hope it's really free. I don't ask for anything. I want people to just have it. If you're ever thinking about trading or getting into these markets, it's a nice foundation for you. You can download that from my website as well.
Thank you once again for joining us, Greg.
Great to be here. Thank you.